Hi, and welcome back to the channel. Today, we're diving into why cash apps and digital banks are taking over traditional banking. From instant transfers to lower fees and 24/7 access, these apps are changing the way we handle money, and you'll want to know what that means for you. Banks used to be the center of everything. That's where you went to cash a paycheck, deposit savings, or ask for a loan. But today, you can do all of that on your phone without ever stepping into a branch. Cash apps like Venmo, Cash App, and PayPal, along with digital banks like Chime, Ally, and SoFi, are taking over the role traditional banks once held. But why is this happening? What are the benefits, the risks, and the long-term impact on our money? Let's break it all down. Convenience. Think about the last time you actually had to go to a bank. For most people, it's rare. Digital banks are always open with everything at your fingertips. Checking balances, sending money, paying bills, or even investing. No more waiting for bank hours. For Gen Z, a physical branch feels as outdated as renting DVDs. Lower fees. Traditional banks thrive on fees. Overdraft fees, monthly maintenance charges, ATM fees. In 2022, U.S. banks made nearly $8 billion just from overdraft fees. Digital banks undercut that business model with no-fee accounts, free ATM withdrawals, and low-cost transfers. To customers, that's like getting a raise without asking your boss faster access to money. Many digital banks now offer early direct deposit, up to 2 days faster than traditional banks. Imagine getting your Friday paycheck on Wednesday. For families living paycheck to paycheck, those extra 48 hours can mean paying rent on time or avoiding late fees. Built for today's lifestyle, digital platforms connect to budgeting tools, investment apps, and even crypto exchanges. Instead of juggling multiple accounts, people can manage everything in one place. It's like carrying a financial command center in your pocket. Accessibility. Millions of Americans are underbanked, meaning they either don't have a bank account or can't qualify for one. Digital banks often let you open an account in minutes, without credit checks or minimum deposits. That's opening doors for people traditional banks left behind. Customer service frustration. Ever had a payment stuck on Cash App? Good luck getting a real person on the line. With no branches, customer service is often slow and automated. When your money's on the line, that's stressful. Limited services. Digital banks are great for daily transactions, but when it comes to mortgages, car loans, or business financing, traditional banks still dominate. If you're planning big life moves, you'll probably still need a traditional bank. Tech risks. If your phone dies or the app crashes, so does your access to money. Outages happen, sometimes lasting hours. In 2023, several digital banks faced nationwide outages, leaving customers unable to pay for groceries or gas. Security concerns. Yes, most digital banks are FDIC insured, but scams on peer-to-peer apps are rising. If you send money to the wrong person or get tricked by a fake request, it's almost impossible to get it back. Unlike credit cards, these apps don't always offer fraud protection. Lack of human touch. A local banker might help you waive a fee, restructure a loan, or give advice. With digital apps, everything is automated. For some people, that human connection still matters. This shift isn't just about technology, it's about culture. Younger generations grew up digital. They expect speed, transparency, and instant results. Meanwhile, traditional banks are shrinking. In 2023 alone, over 3,000 bank branches closed across the U.S. as more customers moved online. To many, walking into a bank now feels unnecessary, almost like using a payphone in the age of smartphones. Will traditional banks disappear? Probably not. They still hold the power when it comes to lending and large-scale financial operations. But the everyday tasks, spending, saving, paying, investing, are shifting online. The future will likely be a hybrid world. Digital first for convenience, traditional banks for major financial needs. Traditional banks are heavily regulated and carry layers of consumer protection. Digital banks are often FDIC insured too, but not all cash apps are. That means some of your money might not have the same protections. And trust is still a hurdle. Surveys show older generations worry about security, while younger ones trust tech companies more than banks. That generational divide is shaping the future of finance. To get the best of both worlds, here are some quick tips. Use two-factor authentication on every account. Only send money to people you know. Keep a backup account with a traditional bank. Double-check your digital bank is FDIC insured. Watch for small hidden fees, especially on instant transfers. Do this, and you'll protect yourself from most common risks. This isn't just about convenience, it's reshaping the economy. Cash use is shrinking, forcing retailers and businesses to adapt to a card and phone economy. Community banks are struggling. losing customers to digital platforms. Fintech companies are competing with billion-dollar banks, breaking up the old monopoly on financial power. And with innovations like buy now, pay later and AI-driven investing, the very idea of money is evolving. This shift is changing how we shop, how we borrow, and even how wealth moves around the world. So here's the big question. Would you feel safe putting your entire paycheck into a digital bank? Or do you still think traditional banks are more reliable? Drop your thoughts in the comments. I want to hear where you stand. And if this video gave you something new to think about, hit like, subscribe, and share it with someone who still waits in line at the bank. Thanks for watching, and we will see you next week with a new video.